Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can actually dominate the markets with at least 87% winners. That's right, 87% winning accuracy, and that's not hypothetical. I want to thank you for taking time out to join me today. My name's Michael Guess, and I'm the President and CEO of TradeSafe. And what I'd like to share with you today is how a rules-based, Boolean logic, mechanical trading system can replace that subjective and discretionary trading you've been doing and give you truly consistent winning results. Before we get started, I want to make sure that you can see and hear everything that I'm doing. If you would, look in the top right corner of your main monitor and you'll see the GoToWebinar control panel. It's a little vertical strip with a few buttons. If you will, go to the topmost button. I believe it's yellow with a left pointing arrow. If you'll click one time, it'll cause the whole thing to slide over to the left and it'll reveal a hidden window. That's where you'll type out your questions, your responses, or anything else. And of course, click the send button. Would you type something in there and let me know that you can see and hear what I'm showing you? I need some feedback. So please give me some feedback. Otherwise, I won't know if you can actually see and hear what I'm doing. Okay, I'm not getting any response from anybody. Are you there? Okay, all right. Noel is, he was there. I need some responses from some other people just to make sure that you can see and hear. A lot of people are coming in awfully late. I guess that's typical. People just show up late. Please go to the top right corner where the GoToWebinar control panel is. Click on the topmost button, and when the window opens up, type something in there and let me know that you can see and hear. Okay, thank you. I'm getting at least a few more responses. All right, I'm going to go ahead and continue. I don't want to delay things. First of all, I want to say thanks again for joining me. I already told you my name is Michael Guest. That's me. And one of the things that I would like to promise you is that by the end of this presentation, three things that you're going to come away with. First, I'm going to show you how you can replace all that uncertainty and doubt about your entries, your exits, and whether you're going to have a winner or not with a true consistent result. That's my promise. Second promise, I'm going to actually give away things. This is not just going to be a dog and pony show. I'm going to give you some actual free trading tips. I'm going to steal these directly from the TradeSafe system itself so you can try them out yourself on your own platforms so that you can see how well this actually works. And finally, I want to show you exactly what it takes to be just like a machine, just as consistent as a machine, and crank out those results. So these are the three things you're going to come away with by the time we're all wrapped up. Now, why am I qualified to say that? Well, first of all, I've got quite a bit of experience. Now, my credibility is definitely there. It's 25 years of being a professional day trader. That's right. I've been a day trader for at least 25 years. And what I'm going to share with you today, and please don't run away if you say, oh, day trading, I don't have time, I don't believe in it, or any of that. Hear me out, because I'm going to make a very strong case for why you need this as at least one of the tools in your trading toolbox. Now, I started TradeSafe about 20 years ago, after I'd already been day trading at least 5 years. And along the way, I've created a host of custom indicators and trading systems, of which I'm going to share the TradeSafe system itself with you today. But before all of that started, I was what in today's parlance you would call a performance coach. I was actually a psychotherapist, but I helped people achieve their goals. And I include that as part of the course that accompanies the software and all of the other tools you'll learn about later as we go through this presentation, I showed people how to achieve their goals consistently, and I showed them how to achieve diamond hard discipline, because let's face it, every single trader has a challenge when it comes to consistency with discipline. Now, that gave me a leg up and showed me how to coach my students along the way, but there's additional things that I've learned how to do since I started out. Going back into prehistoric times, relatively speaking, way back in the late 90s, we had this thing called the dot-com bubble. The market was screaming, climbing higher and higher and higher, and people said it can't go any higher, and all those dot-com companies eventually did blow up. A lot of them did. But one of the hallmarks of what happened back in those days was volatility. We've got that going on right now because of two major factors: COVID, and of course, the gridlock that we've had in Congress for the past several years. So, uh, volatility is something that is really difficult to deal with, and I can show you exactly how to deal with it. The TradeSafe system made it through without any problems during the dot-com bubble, and then if you go forward another 10 years, oh boy, a lot of people got hurt during the big recession of 2008 to 2010. We just kept cranking it out. It didn't even cause us any problems whatsoever. And along the way, from when I started TradeSafe to the present, I've coached well over 4,000 students who are consistently making profits. So that's my background. Now, some of you might say, okay, that's all great. Are you going to record this? Because I may have to leave early, or maybe I want to actually go back and review it because you're going to cover a lot of material. Yes, I am going to be recording this, and Murphy's Law notwithstanding, you're going to get a link to this recording, this replay, later on this evening. So keep an eye out for that email, okay? Now, you may want to ask me questions, and I want you to ask questions during this presentation. So please don't hesitate. Remember, top right corner of your main monitor, the GoToWebinar control panel, topmost button, click on it. It'll slide things over and reveal the window that you can type your questions in. So feel free to start typing questions at any time, but you may want to ask much more detailed questions. So I'm going to give you an additional link in that email that you're going to get later tonight, and it'll let you schedule personal consultation time with me, and it won't be a sales call. I don't do that. I'm not like those other people who try to hit you over the head and close the sale. I'm going to just provide you with truthful answers to your questions. I'll be totally candid, and that way you'll feel that you came away and your time was well spent, and you'll decide for yourself if TradeSafe is really a good fit for you. Okay, with all that being said, one final thing before we jump into the actual content, and this is a requirement. The FTC, that's who controls the internet, they say nobody is allowed to make any kind of promises or guarantees. It has nothing to do with trading. Could be even weight loss or something like that. Well, I'm not going to break that law, but I will share with you as we get further into the presentation what you can reasonably expect based on our performance history so that you can say, okay, I can do that too. All right? The other thing is, if you're a newbie, some of you may be, please don't trade with any money that you can't afford to lose. So make sure you're only trading with discretionary income. All right. Because I've talked about newbies, here's something that is not too far back. It's fairly recent. How many of you remember a couple of 3 weeks ago, the GameStop fiasco, where a whole bunch of people piled on the short sellers, the big institutions that were short selling this stock called GameStop? And a lot of people that were in this social, I guess for lack of a better term, it's a forum called Reddit. And most of them really weren't traders. They just said, oh, we're going to use this thing called Robinhood, which lets them just go ahead and place trades. And they didn't have a clue, most of them. A lot of them were treating it like gambling or a way to flip off social protest, the middle finger, so to speak, at the institutions. And some people actually made some money, but a whole lot of people got taken to the cleaners. That's because they didn't know what they were doing. And what I'm going to share with you today is how to avoid that, how you can actually treat your trading like a real business, how you can be a professional. And it really doesn't take a lot of effort to make that leap. But before we do that, let's take a look at the universe of trading itself. It's very big. You know, it covers everything from buy and hold for months and even years, all the way down to day trading, and you're in and out of the trade in a matter of minutes or less, and everything in between. But if you look at the world of position trading first, there are some real disadvantages that I would like to point out before we focus on day trading itself. First of all, it takes a lot of money to be a buy and hold trader, meaning you get into a position and you hold it for at least overnight, sometimes for days or weeks or maybe months or longer. And the broker wants to make sure that they're protected against your craziness. So they have margin requirements, and they're very, very high if you want to be a position trader. And there's also this issue of delayed feedback. If you bought something today, you got to wait till tomorrow to find out if you're still in that position, or if you got knocked out, or if you're losing money or something else. That can lead to a lot of pressure and stress. So it might be hard for you to sleep at night after you've entered a position and maybe you heard some bad news overnight on the 6 o'clock news. You went, oh my gosh, this is going to affect my position. Well, that's a problem with buy and hold. And here's one that a lot of you don't even know about: accuracy. If you are hoping that your position is going to be a winner, and maybe you think you're using something that has an edge. If you don't trade with an edge, why are you even doing this, right? But let's say you have something that supposedly has an edge. That accuracy gets smaller and smaller, lower and lower, the longer you are in the position. If you are hoping to stay in that position for more than a few days, maybe weeks, maybe even months, your accuracy likelihood starts to drop a lot. So if we flip the coin and look at the other side and look at day trading, well, first of all, it costs a whole lot less to play ball. You could even open a trading account for as little as $500. That's right. Although if you are trying to day trade the stock market, the requirement from the SEC is it is going to be at least $25,000. So you may want to shop around for something other than the stock market, particularly because other than the high margin requirements for day trading there, they also have these other problems. For example, if you even make good money at the end of the year, the internal revenue is going to clip you pretty hard. Whatever your tax bracket is, if you made a lot of money, maybe you're lucky and we're in a six-figure bracket. You might pay as much as 37%, and that is hard. What if I told you that I could keep your taxes much, much lower, that for every dollar that you earned, you would be taxed at the low, low capital gains rate of 15%. That's for 60% of each dollar that you generated, you would be taxed at the 15% level. And the other 40% of each dollar would be at whatever bracket you did finally fall into. Well, that is in the domain of what are called futures and commodities. Now, some of you don't know much about it. Some of you may have heard bad things or myths about it. Some of you may have tried it and love it. I'm going to tell you right away that the institutions are ruining the stock market. They have co-located their computers, their servers, right there at the exchange, and their orders are going to get in ahead of you. You don't have a prayer to get your order in ahead of the institutions. Plus, they do all this thing called spoofing, computerized high-frequency program trading. You don't want to trade where the institutions are hanging out. In the world of futures and commodities, there are very, very few markets that they do. Now, if you want to look at something we've all heard about, for example, the indexes like the Dow, the NASDAQ, the Russell, but not the S&P, that one's actually big enough to where the institutions do trade there. So stay away from the ES, that's the symbol for the S&P in the world of futures and commodities. But why am I bringing up the indexes? Because they trend. They're easy to trade, and you can open up an account with 500 bucks and trade right away. And one contract has $60,000 to $100,000 worth of buying power. It is so much easier to trade those. You don't have to worry about an uptick before short selling. You don't have a lot of the other restrictions that you do in the stock market. So I know I'm kind of going on and on about this, but I'm trying to make a point. So many people just automatically assume that the only thing you should trade are stocks. And the truth is that the deck is stacked against you when you try to day trade the stock market. Now, assuming you do day trade, whatever you do it at, whether it's futures, commodities, stock market, or something else, you are always in control because your trade is over before the close in the afternoon. You're in constant control. You can always jump out of the trade if you want to, but typically a trade will only last minutes, anywhere from 1 or 2 minutes to maybe at the most 15 or 20 minutes. That's about the average. And this means you can sleep very peacefully because you're not in any positions by the close in the afternoon. And here's that final thing I talked about when we were looking at position trading, and that's accuracy. Accuracy is far, far higher because you're only trying to be accurate for only a few minutes, not days, weeks, or months. So you can achieve much, much higher accuracy, and that means you'll lose less often. So what's the accuracy with the trade safe system? Well, this is not hypothetical. Every single one of my students for the past 2 years that got benchmarked, and I'll explain what benchmarking is when we get to it later in the presentation. Every single one of my students that established their own independent track record achieved at least 87% winners in their own trading. How would you like to achieve 87% winners? Yeah. Okay, so if you add this all up, you're going to end up with more consistency because consistency, frankly, is the holy grail of trading itself. Not whether or not you've got some kind of super uh, special system or indicator or something else. Consistency is what you truly want. And that's really hard to get in the world of trading. So if you want consistency, you don't have to go any further than trade safe. And all that adds up to meaning your money will go a lot further because if you're losing less and winning more, you can afford to spread it around, trade more markets, and diversify. Now, in spite of everything I've said, I know there's still some of you that are clinging to a few myths. You think, oh, day trading's complicated. Well, there could be some methods out there that are complicated, but I've taught an 8-year-old kid how to use the trade safe system. This is really not rocket science. Another myth is, oh, you got to have super fast reflexes. You got to shoot anything that moves, just like a video game. Not true. With the trade safe system, this is a much more strategic approach. You're waiting for conditions to be met. You're going to park a resting order and let the market put you into the trade. And when we do go to the actual charts themselves, you'll see me do exactly that. That means you can take a much more relaxed approach, a more strategic approach, kind of like playing chess, right? So here's one of the final myths is, oh, you got to sit there all day long, get hemorrhoids and eye strain, and you get brain fog. You can sit there as long as you wish, but I don't recommend it. I don't do it myself. You can actually do part-time trading. If all you want to do is just trade for part of the day, maybe the morning or the afternoon or something like that, you can do it. And here's how and why. Because of something called cycles. You don't need to be sitting there stuck to staring at your screen. So real part-time trading is possible, and it is made possible because of something like that camcorder on the right. It has a zoom lens that lets you zoom out, see the big picture. It's wide angle, zoom in real close and see the detail, all the granularity. Well, you can achieve the same thing with your charts by changing the settings on your charts. You don't want to look at a daily chart when you're day trading. You don't even want to look at an hourly chart. You don't want to look at a 30-minute chart. All those are really too big. I'm actually going to give you in just a few minutes the actual settings we use for day trading the indexes. So you can go practice on those yourself if you want to do that. And I'll give you that formula so you can practice on any other market, because you'll know exactly how to set up your charts the same way we do. So you can achieve that zoom lens effect. Because when you have multiple charts, multiple time frames, you can actually zoom out and see what the trend is for at least part of the day and maybe the whole day. Zoom in some more, see what the dominant cycle is, the dominant trend is for a chunk of the day, maybe an hour or two, and zoom in all the way when you see a setup for a trade. And that's what I call the low risk surgical entry. By being able to zoom out and zoom in using your chart settings, this allows you to adapt to whatever the market can give you. So I'm going to give you those actual ratios by showing you the formula. Now, first of all, just like those three charts there, they represent the same market, but at different chart settings, kind of like different magnifications. The biggest chart on the left is the highest setting. That's kind of the wide angle view, and it's just started a downtrend. If you zoomed in 300%, you're seeing a dominant cycle. You see more detail. If you zoom in another 300%, you get real close granularity. That's what you need for that low risk surgical entry. So you want to avoid trying to day trade with a single chart, because that one size fits all approach just frankly doesn't work. You need to be able to use multiple charts in order to gauge what is not just the trend on a chart, but how strong is that trend. Strength of trend is a big factor in the trade safe system, because once you know how strong the trend is, you will then know what the market at that point in time is capable of giving you. So I'm going to now show you the formula so you can do it yourself. Now I'm going to use as an example the minis, as they're called. That's the electronic version of the indexes like the Dow, NASDAQ, and the Russell. In Chicago, where they're traded on that exchange, not on the East Coast where the stock market is, but in Chicago, they open at 8:30, which is 9:30 on the East Coast. And they close at 3:15. Now, they actually trade around the clock 24 hours, but 95 or more % of the volume is traded during the daytime, which is when the stock market is also open, right? So you want to be able to focus on when the majority of the volume is. So if you're looking at something other than the indexes, some other market like a currency, find out its open, find out its close, and then calculate the number of minutes there are between the open and the close. So if you're looking at the minis, opens at 8:30, closes at 3:15, that's 405 minutes. That is your starting point, your master number. And from there, you're then going to take a descending series of settings that get you to your final chart settings. You're going to look for the biggest number that divides into 405, except itself, of course, And what is that? 135. Way too big for day trading, even too big for swing trading. What's the next biggest number that divides into 405? 81. These numbers aren't numbers that you're going to find in your drop-down menus in your day trading platform. I can promise you. That's why you need a platform like NinjaTrader, which is what we wrote our system for, because it is a professional grade day trading platform. If you're using something like thinkorswim, it's a lovely platform for options trading, but it has limited day trading capabilities because they were grafted on as an afterthought many years ago. So if you're very serious about your day trading and you really want to compete on a level playing field, you want to do as I say here. I live in Austin, Texas, and in Texas we have a saying, don't take a knife into a gunfight. So don't use thinkorswim or Sierra charts or any of those, no disrespect, amateur platforms. You really want to use professional grade software. Okay, so let's come back to these numbers. We left you at 81. That was still an awfully big setting, too big for day trading. And we were wanting to achieve a 3-to-1 or 300% ratio. Why? Because we want that wide angle, dominant cycle, and close-up low risk surgical entry settings, 3 charts. So what is 1/3 of 81? That also divides into 405. It's 27. A 27-minute chart is actually more accurate than a generic 30-minute chart. You'll find that 30-minute chart setting on your drop-down menu, but you won't find 27. So you need to make sure that your platform can actually create settings that are whatever you want them to be. So let's keep going with this 3-to-1 ratio and wrap this up. 1/3 of 27 is what? 9. 1/3 of that is 3, and 1/3 of that is 1. And there are your 3 chart settings. Your wide angle chart on the left is your 9-minute chart. Anything above that is too big for day trading, believe it or not. 1/3 of that is your dominant cycle. That's your 3-minute chart. And then zooming in another 300%, your low risk surgical entry is your 1-minute chart. So there is your 3-to-1 ratio. Now I need to ask you, I've gone on for quite a while now, and I've covered a lot of material, but I want to make sure that this is making sense to you. Do you understand how this works? Do you have questions? Please type yes if you do understand how we got to this point, if you understand this formula. Give me some feedback because I'm not going to go forward unless I get some answers. Okay, I got at least one response. There we go. We're starting to get a few. TradeStation. That's a question from Bruce. He wants to know, is TradeStation okay? Well, believe it or not, I started out with TradeStation some 25 years ago. It wasn't called TradeStation then, it was called System Writer, and the Cruz brothers were the creators. But then many years later, they sold it to the Japanese, and the Japanese haven't done anything with it since then. It is so 20th century technology. It does not have the automation and the power that NinjaTrader does. You can use it, but you're going to end up doing a lot of things manually. You will not have the automation that is programmed into NinjaTrader. Okay, all right, so moving on, I want you to know that this volatility that I'd referred to about 15 minutes earlier, we got a lot of it these days because of COVID and political gridlock and so on and so forth. Volatility in plain English simply means that the market is moving so fast that the average true range, the average size of a 1-minute bar is nowadays typically a lot bigger than it has been for the past decade or two. And that means that the risk levels that are built into the TradeSafe system are quite often exceeded. And I'll cover a little bit later what those risk levels are. So what do we do in order to give you an opportunity to still take trades if you can't take a trade on a 1-minute chart? because the bar is too big, the risk is too big. We use something called tick charts. Type yes if you've ever heard of tick charts. If you haven't, you can visit with me, schedule time, and I'll explain what it is to you in more detail. But tick charts basically are, instead of time and price, it's more like volume and price. Okay? It's like after so many trades or contracts have been traded, the bar is finished, instead of after so many seconds or minutes or whatever. Okay? All right. So I have given you the formula for how you can set up your own charts, whether it's for the indexes or you just do that for any other kind of market that you want. Now, a lot of people are saying, well, this is all great. Now I've got settings. What do I do with this? Well, assuming that you have some method of detecting trend, and I'm going to be showing you how we determine trend in the trade safe systems charts as we get a little bit further in. But a lot of people say, yeah, that's all good, but I can't tell you how many times I've been killed taking trades when the market was chopping or in congestion. Do you have anything that'll keep me out of trouble? Well, the trade safe system will keep you out of trouble. First of all, you will get both visual and audible alerts that notify you about any change in your trending condition, whether it's a change of trend from up to down or down to up, or whether you've lost the trend and gone into congestion, or whether you're getting out of congestion and starting a brand new trend. You will both see it on your charts and you will also hear it, and it will automatically update itself. You don't have to lift a finger. It's totally automated, and your computer will talk to you. It doesn't give you some kind of sound or something like to alert you. It'll say something like NASDAQ 1 minute change of trend, or NASDAQ 1 minute new congestion, or NASDAQ 1 minute breakout confirmed. There's a whole host of conditions that when you have trending conditions changing, your computer will talk to you in plain English, and you will absolutely know when there is some kind of condition that's changed. Why do we want to notify you with some kind of audible alert? Well, let's say that you've been following a particular market and it's not trending. It's in congestion. For example, if you look at this screenshot right here, look at the bottom of the screen. You see these colors? When it was green, it was in an uptrend. Real drop dead simple. When it was the salmon pink color, it was in a downtrend. And then it was in an uptrend again later. What about those periods when there was no color? That's when it was in congestion. What is that rectangle up above? It's a visual aid that simply lets you know what the algorithm is basing its calculations on. Now, you don't know what those formulas are, so that's not going to help you here today, but the true indication of when you're in a trend or no trend, in a trend or no trend, in a trend, and so forth, is there visually. But what if you are in congestion and you don't want to sit around and watch paint dry and wait for a new trend? Maybe you want to go in the kitchen and fix a sandwich or something, or get a cup of coffee. Wouldn't it be neat if you could just listen for your computer to talk to you and tell you that it's time to come back and pay attention, that you do now have a new breakout from congestion? Hey, this system will not only do that, it will even do it for other markets that you're not watching. You see, in NinjaTrader, we have this thing called workspaces, which simply means all your charts assembled together. That's called a workspace. But you can monitor more than one market. But you don't want to look at multiple markets all at the same time. That's called multitasking, and multitasking has been thoroughly disproven. It is going to overload your brain. If you're one of those people with 6 or 8 monitors trying to follow about 10 or 12 markets and be in 5 or 6 trades at once, you're shooting yourself in the foot. Take it from me. I have a background in neurophysiology, and I know for a fact that you will be far more accurate if all you're doing is just focusing on at most 2 or 3 things at once. That's it. So at most you need 2 or 3 monitors. And if you're looking at one market at a time, what about the other markets? They can be minimized. Their charts can be hidden. And what if all of a sudden there's a new trend in one of these hidden markets? Your computer will talk to you and let you know. That way you'll always be appraised about what the conditions are. This is a very, very cool feature. So you'll always be told and always be shown when it is safe to start looking for a trade. But you know what? A lot of beginners, they focus on entries. Professional focus on exits. Let's look at this screenshot here for a second. You see this point where my cursor is and price retraced down to this moving average where the big red arrow is? The lowest point in that pullback is kind of like a rubber band that's stretched downward. You didn't change trend because see, it's still green all the way across. You're still in an uptrend, but you're retraced. And what you want to catch is when the market snaps back in the direction of the trend. Now that's as old as dirt. Buying and selling on pullbacks has been around a long time. But what you would want to do is park a resting order one tick above the high of that last bar in the pullback. And you'll see me do that when we do go to the charts. And I will show you precisely the 4 steps to get into a trade safe trade with real precision, no discretion, no subjectivity, okay? But coming back to this screenshot, if you have a resting order here, you're going to wait for the market to trade through it, which it did a couple of bars later. Then you would be in the trade. Now, we don't use a single way of exiting our trades. No one size fits all. I'm going to teach you and give you the rules in a few more minutes, how you can decide whether or not you want to get in and get out real quickly, that's called a scalp, or whether you want to try to make that trade last as long as possible, something called scaling out. And this is a screenshot of that. So let's suppose you got in one tick above the high of that bar right here, and you exited half of your position. Took some money off the table and paid for the trade. That allows you to totally relax, and you've already got a paid for trade. What do you do to decide when and where to get out? We have an automated trailing stop indicator. That's what these blue dots are. And they will self-adjust, as you'll see when we actually go to the charts. They will adjust themselves in real time so that your trailing profit stop will follow the market as long as it is still got enough gas in the tank. When it starts to fade back and maybe about to change trend as it did right here, notice that last blue dot is where the market came down and hit it. That's where you would have gotten out of the trade. So you do not need to guess where to get out. The trade safe system's exit strategies are all pre-programmed. You don't need to say, oh, I'm going to get out at a Fibonacci level or market profile or some kind of support or resistance. All your exit strategies are predefined based on, as we've been saying already, the strength of the trend. And I'm going to show you how to determine that in just another minute or two. What it really all boils down to is, are you going to really scalp? Get in and get out really quickly because the trend is very, very weak, but you might still make some money. Or you want to scale out, pay for the trade, and stay in the trade as long as possible with the other half of your position. To use a baseball metaphor, if it's a weak trend, you'd bunt and just get on base. If it's got a lot of wind at your back, you'd want to swing for the fences. That would be the equivalent of scaling out. So I'm going to show you a scaling out exit strategy when we do go to the charts. So that trailing stop, as you can see in that screenshot, will adjust itself in real time, and you'll see it in the charts as I demonstrate a live trade. So this gives you the highest probability of having a real winner because you're adapting and adjusting your trades to what the market is capable of giving you instead of some kind of one size fits all. This allows you to achieve real consistency in your trading, real high results of winners like 87%. So if we look at a symbolic 9-minute chart, let's say it's that big arrow, it's trending upward, and a 3-minute chart symbolically is trending downward, but kind of meandering slowly downward, not real strongly. And a 1-minute chart has just begun an explosive rally. They're not all in sync, are they? Optimally, this is what you really would want. So, are you going to get that? Not really. The majority of the time, you are not going to get all three charts, the 9-minute, 3-minute, and 1-minute trending together. So I'm going to teach you now the same formula that I teach my own students on how to evaluate which exit strategy is the appropriate one to select before you even get in the trade. You don't want to do it after you're in the trade. It's too late. So here's how you assess a potential trade before you get in. And to help you remember, we're going to give you what's called a mnemonic. That's a rhyme that helps you remember stuff. And it goes like this. The minimum is the 1 and the 3 need to agree. Best as if all three agree. So if all three of your charts, your time frames are trending together up or down, that's your 9, 3, and 1 minute, and that includes the tick charts, then you have the potential for a really strong price move with a lot of follow through. You wouldn't want to throw away your profit and leave money on the table with a scalp. You want an exit strategy that keeps you in the trade as long as possible. You want to scale out. Now, as I already mentioned, you're not going to get all three of them trending together that often. And in our example, today, I'm going to show you where only the 1 and the 3 agree, and you can still scale out, but at a closer, easier to reach target. You could also choose to scalp. If only the 2 time frames that are trending together, that's the one you enter on in the next bigger time frame, which would be your 1 minute or a tick chart, and the 3-minute, if they're trending together, but the 9-minute isn't with them, you have the potential for a weaker, briefer price move. So yes, you might want to scalp, or you could use what is called a scale 50. So I'm going to tell you what the 3 exit strategies are that we have. We have a scalping exit strategy where you're going to get out at, if you were trading the minis, just as an example, once you had achieved $100 worth of profit, boom, you're out with the whole position. If you're doing a scale 50, you're going to take half the position off at $50 worth of profit and then trail a profit stop if there's still gas in the tank. It may not go much further. It may fall back and just scratch and hit the break-even stop. Now, if all three agreed, well, you'd scale out at $100 worth of profit. And again, you'd trail a profit stop, unless, of course, it didn't go any further and it would fall back and scratch. So you have 3 different exit strategies. What can you expect with the TradeSafe system with this much versatility? Well, we all would love a ruler straight equity curve. And if we stick to the example of the minis, using contracts as an example, we're going to start you small. Now, some of you may have big accounts, some of you may have small accounts. A small account would be trading anywhere from 1 to say 3 or 4 contracts. Anything bigger is medium size, and then you can start to get much, much bigger. So let's say you're trading anywhere from 2 to 4 contracts. The margin requirement for each contract for a typical brokerage account is $500. So that means if you were wanting to trade 4 contracts, you need at least a $2,000 trading account. Remember when I told you if you wanted to trade the stock market just to play ball, you needed at least a $25,000 account? Wow, this is a whole lot less. So, but do you want to trade with only a $2,000 account? What if you started out with that and your first trade was a loser? Uh-oh, you can't trade with 4 contracts anymore. You're down to 3 because remember, you need to keep at least $500 worth of margin in your account for each contract. So if you had a loser and you drop below 2,000, you can't trade 4. So what do I recommend? At least a $5,000 account. That means you are overcapitalized. You can trade in a relaxed manner. You're not going to worry if you get a few losers. You won't trade emotionally with your back to the wall. So if you trade with a $5,000 account, which is not asking too much, how do we achieve, as I mentioned in some of the emails that invited you to this presentation, how do you achieve an average daily return on your investment of at least 2 to 4%? Well, I'll show you. Let's say that you take every single trade that the trade safe system generates a signal for, and you do it all day long, and you do it all week long, Monday through Friday, and you do it all month long. That's 20 or 22 trading days. In other words, you're taking every single signal for a full month. At the end of the month, you add up how much your net profit is. You deduct the losers from the winners, and that net profit, if you divide it by the number of trading days, 20 to 22, however many it would be, that average daily return is going to be at least $100 to $200. And I'm not going to cheat and say you're trading lots of markets. I'm going to limit it to just a single market. So if you restricted yourself to just one market and took all the trades, you'd still be able to generate about $100 to $200 a day. And if you divided that into a $5,000 account, that's how you arrive at the 2 to 4% return on your investment. Type yes if you understand how I arrived at those numbers. Meanwhile, I'm going to see what DG Hyde has typed out. He said, what is the most common point of failure for those who are not successful? Just a minute, I've got to see what he typed here. The main reason that people do not succeed is because they don't follow the rules or they don't complete the course. If they do complete the course, as I've already told you, every single one of my students, every one of them for the past 2 years has achieved a winning percentage accuracy, a track record of at least 87% winners. Did that answer your question? All right. So if you take that average of 2 to 4% and it's $100 to $200 a day, you say, oh my goodness, that's okay, but I need to make a lot more than $100 or $200 a day. You know, I've currently got a job and I'm earning 6 figures, and that's not going to cut it, Michael. Well, let's face it, if you got a bigger account, then you trade bigger size. I'll only use this as a small size account example, since the majority of the people who come to me don't have big accounts. But what if you are a small size trader and you really would like to achieve the results that bigger traders can? Here is something else I'm going to give to you for free. If you start out with a $5,000 account and you don't take any money out, you just keep the profits inside the account and you build it up to where you hit 7,500. That's a net increase of $2,500. Now you're up to $7,500. All right, once you've hit that threshold, then you can increase the size of your trade from 4 contracts to 6. You're just adding a pair of contracts for each $2,500 of profit that you've been able to build your account by. Now, if you hold everything constant, then it should take a little bit less time to reach your next threshold of $2,500 more profit and build it up to $10,000. Why is that? Because you're trading bigger size and you will make more money. So if you're up to $10,000, you're going to go from 6 to 8 contracts and so on and so forth, 6 to 8, 8 to 10, and so on and so forth. Now, there is a limit to how far you can go, because I've had some people say, my goodness, Michael, I did the math. You can hit 4,800% return at the end of a year. That's not going to happen. First of all, it's not real. And I do not want to hype anything about the trade safe system. First of all, let's come back to frequency of trading. I told you you can treat this as part-time trading. Maybe you got a job. Maybe you just don't want to trade all day long. And frankly, I don't advise it. It's not good for your health. Sitting is the new smoking, as they say. But instead of trading 20 or 22 days a month, let's say you cut it back to 15 days a month. And instead of trading all day long and making $200 a day, you just traded half a day, maybe the morning or the afternoon, and that's only $100 a day. So if you're trading 15 days a month and you're averaging $100 a day, that's averaging, you've already deducted the losers. You're making $100 a day, 15 days, that's a $1,500 return on a $5,000 account. That's a 30% plus return on your investment. So if you've heard me say it before, bear with me, but I just love saying it. There are hedge fund managers who would kill to make 30% return on their investment in a year, let alone in a month, okay? We've actually generated in excess of that in a single day. And all of this is all predicated on one market. If you're following the minis, 3 out of the 4 that I recommend, the Dow, NASDAQ, and Russell, your odds go up even more. So do you think this is what you're going to get on your equity curve? Well, first of all, let's do another reality check. I do want to make sure that we're all on the same page. First of all, we're all human beings. We're not clones of each other. We all have emotions. We all have, and remember, I used to be a psychotherapist in a past life. You have a subconscious and you have a comfort zone that affects the way you trade. You might be more aggressive than the rest of the guys. You may be more conservative than the rest of the gals. Or maybe you're just different. You're not going to always take every single trade that you get a signal for. So that's why you need to do what the professionals do. Professionals benchmark. Yep, that's right. Professionals are going to end up calibrating themselves, their individual personalities, their comfort zones, if you will, to what the system is capable of giving. Here's how it works. You will, in my course that precedes and leads you up to the benchmarking, you will be taking every single trade. And no, you won't be trading real money, because I don't want you to trade real money until you've built an authentic track record, which is what benchmarking is. You want to learn from your losers. I give you a pre-formatted journal so that every time you take a trade, You've got to journal that trade before you're allowed to take the next trade. So get over it if you see another setup right after you finished a trade. It's much more important that you learn why this trade worked or did not work. Don't be an amateur. This way, you will be able to take all that knowledge about, oh, did this support or resistance level interfere with the follow through of my trade? Did it keep me from reaching my target, for example? You're going to take all of these kinds of conditions that aren't part of the trade safe system, and you're going to factor them into your trading during benchmarking. You're going to do a statistically viable sample of at least 30 trades. More would be better. And you are allowed to pick and choose the best of the best and leave the rest. You're allowed to select the trades that fall within your comfort zone and based on what you had been learning from all those journal trades that you practiced on before. At the end of those 30 trades or more, you will meet with me privately in the trading room and we will review your history. I give you a statistically viable, I give you a macroed spreadsheet that will track your performance. It will enable you to determine the following things. First of all, I ask every student after they finish their benchmarking, okay, how much money did you make? Deduct the losers from the winners. How much was your net profit? Typically, my students, for about 30 trades, make around $3,000 to $5,000. So that gives you a strong indication of what you can reasonably expect when you go live. Next question, what was your percentage of accuracy? And as I've already told you multiple times, all of my students have hit at least 87% winners. And again, they're seeing the same signals that I do and the rest of the other students see, but they're taking the trades that they wanted to take. So it's their trading track record, and it's at least 87%. I've had students go far in excess of 95%. So it's really possible to get way up there. But we're not done. You want to be able to replicate that, right? You want to know, well, okay, which chart is the one I should be using most of the time that gives me the best results? Should I be using the 1-minute chart for entering my trades, or should I use one of those 2 tick charts? This spreadsheet will reveal what you did best on. It'll show you the highest percentage of winners or where you made the most money. But we're not done yet either. Remember, it's how you manage and exit your trades is where the real profits are. And since we've got 3 different exit strategies, a scalp and 2 different scaling out exit strategies, the same thing applies. Which of the 3 exit strategies gave you the best results? So when you're all said and done, you will be dialed in, you will be calibrated to the trade safe system based on your personality. This is something that nobody else in the entire industry does. I don't know why they don't do it. Maybe because it's time intensive and they want everybody to believe, oh, all you got to do is just push buttons and you'll make money. And I'm a believer in being a realist. I want you ultimately to become a professional trader and to treat your trading like an authentic business. So now that you know all of these things, let's go ahead and move into the charts themselves and look at a sample trade. What I'm going to do is freeze the screen right now. If you're watching a replay, you'll be able to see what I'm doing, but if you are waiting for me, bear with me a few more seconds and you should be able to see my charts now. Would you please type yes if you can see my charts? Let me know that you can see my charts. Okay, good, good, good. All right, I do see that some people did come in later than when we started. So if you came in later, please do watch the replay because this will not make sense. Yeah, I'm using this as an educational example. rather than just try to grab something randomly from today or yesterday, I'm trying to pick something that makes it clear so that you understand. Do you appreciate where I'm coming from? Okay, good. So here is a quick tour of the charts. First of all, remember I said that rhyme, the 1 and the 3 need to agree, best as if all three agree. Well, right here, dead center is the 1 minute chart. There's the 3 minute and there's the 9 minute. How do we know they agree? Here's the trend indicator down below. The color is salmon pink. It's a downtrend. Here's the 3 minute, also a downtrend. Uh-oh, the 9 minute is not in a downtrend, so that rules out using the scale 100. It only means we could use either a scale 50 or a scalp. Now, in the example I'm going to take today, I'm going to use a 1 minute chart. We could have just as easily chosen a trade from one of the tick charts, but I'm showing you the 1 minute chart because it's just so much easier to focus on, since tick charts can sometimes move a little more rapidly than a time-based chart. And what I'm going to do right now is turn on, oh yeah, before I do, you may say, what's this other stuff down here? This right here, Bruce, you must have come in later. I explained what a scale 50 was earlier, but I will repeat it for your benefit. It simply means that when we hit $50 worth of open profit, we are going to take half of the position off the table. So we're going to trade 4 contracts. And that means when 4 contracts hit at least $50 worth of open profit, we're going to close out half of the position. 2 of the contracts will be taken off the table. The remaining 2 contracts will still be live, and we will see if we can trail a profit stop. Okay, he got it. Now, what's down below here? Well, this is the alerts log. It's just letting you know all these changes in trend. As you can see, you'll hear audible alerts throughout in the background as I go through various things. So that's just letting you know the computer is talking to me as I'm doing stuff. But here is the data box. The data box is simply showing you everywhere you put your cursor, you're going to see more than just the open, high, low, close. At the bottom, you've got our indicators that show us very special information that when the time comes, I'll explain what to look for. So for now, I'm going to put it right back down here so you can see it. There it is. And I'm going to turn this on, and you should be able to watch. See the price bar on the 1 minute chart? All of the charts are actually updating. But what I'm going to do, because we have trend agreement, that means at least the 1 minute and 3 minute are trending together, in this case down. That's our first step that needs to be satisfied. 4 steps have to be satisfied before you park a resting order for getting into a trade safe trade. So now that we've satisfied the first step, trend agreement, we don't even need to look at anything else that's on this screen. So I'm going to maximize the window that holds this 1 minute chart. See, we've limited the amount of information we need to follow. Now I'm going to move this up a little bit higher so you can see it better. Now, we're in a downtrend right now, and I'm going to do a little drawing while this is in motion. I'm going to show you what the second step is, and that is a retracement or a pullback. So if we're in a downtrend, let's say it goes down to maybe right here, and then it begins to retrace. Maybe it goes up to something like right about there. Think about this pullback or retracement, not a change of trend. It'll still be as each bar continues following that direction. It's just profit taking while you're in a downtrend. As I said, buying and selling on pullbacks or retracements is as old as dirt. It's been around forever. But what I'm doing is I'm bringing real explicit precision that is missing from everything else you've seen before. What we're going to be looking for is a retracement to a moving average. Now, normally the moving average is visible. Why did I hide it? Simply because people are always asking me, what's the setting for your moving average? And I get really tired of having people ask me. So I've hidden it. But you may say, well, how do you know if you're close enough to the moving average? You want to have price get close enough to it. Ideally, you want it to touch, right? Well, there's more to it. You want it to either touch the moving average or come within what I would call a zone of influence, X number of ticks away from it. So if price stops just short of it and it's within that little sweet spot, it'll still be viable. You will know with precision that you're close enough. How will you know? Well, when we get close enough, this indicator down here, the readout will show how many ticks away you are. Like right now, this bar is saying the part of the bar that's closest right there to where the moving average is 10 ticks away. As it grows, watch this change. If it grows taller, see it's now 8 ticks away, right? So you know in real time that you're getting closer and closer. We need to have a minimum number of bars that follow this pullback, and it needs to be at approximately a 45 to 90 degree angle. You don't want it to meander around. And I'm going to pause things here for a moment and show you what to expect when we do get there. Let's say the last bar in the pullback, and I'm going to say it's approximately here. I'm going to draw, well, I'm trying to draw it. There it is. Let's say this is going to be a price bar, the last bar in the pullback, okay? And it will be either touching, if it's touching the readout down in the data box right here, we'll say 0, or it'll have X number of ticks away, okay? That is called your setup bar. It's setting you up for the trade. And all these bars pulling back to that last bar in the pullback is like a stretched rubber band, building up tension. And you want to catch the snapback. You want to enter the trade so that you can catch it as it moves back down in the direction of the trend. That's called trading the retracement or the pullback. How do you know where to put the order? Well, I'm going to show you the remaining steps in just a few moments, but when they're all fulfilled, you're going to park a resting order one tick under the low of your setup bar. I'm going to draw a horizontal line representing the pretend order. You'll see the actual order when we do the trade in real time. This means that you've got loads of time to get ready. You're not chasing the market. We don't use market orders. We use a stop limit order. That means you're eliminating slippage getting into your trade. And that means some later bar, it might be the next or several bars later, but however many it takes has to trade down through that resting order. Once price trades through it, you are in the trade. And that's basically what you're going to be looking for. So I'm going to erase all this and we're going to actually do the trade so that you now know what you're looking for. And I'm going to turn this back on, and I'm going to actually speed things up a little bit.
9-minute breakout reset.
Now, you even heard the computer talking to you, letting us know that the 9-minute chart is back into congestion again. It said reset. I'm getting ready to slow this down because we're getting very, very close. All right. Now I'm going to pause this for a moment. I'm going to put my cursor on this last bar. Look in the readout where it says Rule 21. When I do that, it says 0. It's actually touching that moving average. Now, the moving average will be actually visible, so you can see it as you're approaching it when you're using my actual system. I already told you the only reason I hit it today is so that people quit asking me for the settings. Now, we have just fulfilled the second step in the 4 steps to entering a trade-safe trade. Real straightforward, real simple, real precise, but I don't want to put all my eggs into one basket, and that is a pullback to a moving average. I would love to have some kind of independent confirmation, especially if it's calculated a different way, uncorrelated, as they say. That's what this right here is. This red line, it's sharing space with the trend indicator. It's an oscillator. I'm not going to tell you which in the family of oscillators it is, but all it needs to do is get overbought in this case. If it was a trend in the other direction, it would be getting into oversold. But it's already overbought. So it's satisfied the third step. Real simple. And by the way, we're not looking to get into the trade when it turns out of overbought because indicators lag, don't they? We're going to let the resting order put us in the trade. Let the market prove itself. So we've got 3 steps satisfied. What's the final and 4th step? Risk. Risk is based on where you would enter the trade a tick below the low of the bar when it's about to finish. And when is it going to finish? Look down here. This is a counter letting you know how many seconds there are left in that 1 minute bar. It's got 42 seconds left. When it's about 3, maybe 4 seconds before 0, you're going to park the order. Don't wait till 0 because you might miss the trade. Now, when you are about to park the order, you're going to keep an eye on this indicator right here, the readout from the indicator. It's calculating the risk, and it's not calculating it on the basis of the whole position. It's calculating it on the basis of each contract, because I don't know how many contracts you might want to trade, maybe 2 or 20, I don't know. So the maximum risk, if you're scaling out per contract, meaning the most you can lose on a per contract basis, is going to be $100. It actually could be less. It could be less because we base this on the size of the bar. I'll show you what I mean in a few moments. Before I do that, let me tell you about the risk. I mentioned scaling out already. What about scalping? The risk gets even smaller, $70 or less. We use variable size protective stop loss orders. They're based on the size of the bar. So what I'm going to do is turn this back on, and I'm going to let it count down until it gets about 3 or 4 seconds before 0. And then I'm going to pause it so that we'll have plenty of time for me to explain things rather than just jump into a trade. I want you to understand what's going on. You can see the counter in the lower right corner, 21, 20, 19, and so on. And you can see the bar growing bigger and bigger, and it's getting closer and closer to 0. It's almost there, and I'm going to pause it right about. There we go. Now, with about 4 seconds left, if I put my cursor on that bar, look at the readout in the data box. It says risk is $45 for each contract. That's right. That's the size of your protective stop loss order. You may say, oh, it's impossible. You can't have stops that small. You'll get stopped out all the time, Michael. No, you won't, because we use what is called logical stops. Here's what I mean. Once you're in the trade and price is moving in the direction of, more and more profit. The tip top of that bar is going to end up being what is called a pivot or a swing, just like this is a swing low pivot. See where these gold dots are? That's a support level. Up here, this is an inverted V shape. Up here, that's a swing high. These green dots, that is a resistance level. Well, this too will become a swing high after you're in the trade. So basic technical analysis tells us that if you're in a downtrend and price turns around and goes up through resistance, you are not in a downtrend anymore. You're in an uptrend. That's basic technical analysis. So that's why we call it logical stop placement. Does that make sense? That is why it's possible for us to achieve very small stops. So if you have a small size bar and you enter one tick below the low, and your stop after you enter the trade is one tick above the high of the bar, the distance from where you enter to one tick above, that distance is in ticks and dollars your risk. And if the bar is bigger, the distance is bigger and so is the risk. If it's more than $100, you can't take the trade if you're scaling out. If it's more than 70 and you wanted to scalp, you can't take the trade either. We want to scale out. So right now, with 4 seconds to go, our risk is only $45. So what I'm going to do is, with Ninja Trader, it allows us to park the order directly on the chart. Now, most of you that day trade probably already know that you use this thing called a DOM, D-O-M, which stands for depth of market. It's nothing more than a window that floats above your price action, and it has an ascending column of numbers and a descending column of numbers for the bid and the ask. It's not terribly intuitive, and you got to take your eye off the ball, and it's so 20th century. 21st century technology lets you park the order directly on the chart. I have my cursor positioned one tick under the bar's low, and if I right click, this grouping of orders are all together. I ignore all the other choices in this menu. I'm always going to look for the orders, and it's always going to be the last choice. So this is going to be a sell order, a stop limit to eliminate slippage, 4 contracts at that price. So I'm going to left click and choose it and listen to the computer. I don't know if you could hear it. Did you hear it? It said order submitted. I'll even turn up the volume a little bit. Now, this right here, this line, very graphical, very intuitive, very accurate, is showing you where your resting stop limit order is. 4 contracts on a sell SLM stop limit. And if you change your mind, you can cancel the order by clicking the X. So that's it. We are now going to let price action, let the market prove itself, let it snap back. So I'm going to turn things on, even speed it up a little bit. Order filled, and I'm going to pause. And now that we have this line, which was one tick under our setup bar, we've got 2 more lines, this green one and this red one. The green one represents how far price needs to go to hit $50 worth of open profit and buy back 2 of our 4 contracts, since this is a short sell. And you will have a paid for trade. You will have made 50 bucks right there and then. And in the process, your stop will get moved automatically to break even and 1 more tick of profit. So that if you didn't hit the target and all you did was kiss it and it came back, you wouldn't let a winner turn into a loser. That's hedging your bet. But I'm going to show you right now, this stop loss order is at the maximum of $100. We're just going to drag it down to 1 tick above the top of that bar. That represents $45 worth of risk from here to here. Got it? So watch what happens at 4 times normal speed. We'll give it a little bit of time to make up its mind what it's going to do.
Target filled.
Target filled. You should have heard the computer say it. And you can even see the prices of your entry and your exit. I'm going to remove those for now. Well, hold on. There we go. That way it's a little cleaner and easier. Notice their stop, which I had moved to 1 tick above the top of the bar, got automatically moved to 1 tick of profit. That's automation. The mechanical system is strictly mechanical from start to finish. That doesn't mean it's automated from start to finish. It requires you to pull the trigger. But once you're in the trade, automation takes over. You saw the stop just get moved after we hit the target. The green line disappeared, and you've made $50 in closed profits. Now, if price were to come back and hit the break-even stop, really 1 tick of profit, you'd pick up another $10 and you'd have a total of a $60 winner. Modest profit, that's fine. But something else has also happened automatically, and this is why you can't use TradeStation, by the way, Bruce. The stop got moved to break-even in 1 tick of profit, and it canceled and replaced it from 4 contracts to 2 because we got rid of 2 of them, remember? We don't need 2 contracts in our stop order, and it's not a protective stop loss order anymore. It's really a profit stop. So let's turn it back on at 4 times normal speed, and I'm going to speed it up to even 6 or 8 times normal speed, and then I'm going to pause it and show you something else. Now, you see these blue dots? Earlier in the presentation, I told you that was our trailing stop indicator. We need to tell that trailing stop indicator to associate itself with our profit stop. Here's how you do it. You just right-click on the actual stop loss order and make the connection through a little menu. And I'm going to give it a 2-tick offset. I'll show you why in a little while. Now, our stop is still here. Nothing has changed. The indicator is still way up here. Every time a 1-minute bar finishes, it takes a full 60 seconds. You'll see another one of these blue dots appear, and they're going to adjust themselves, their distance. I'm going to turn it on right now as I'm talking. They will adjust themselves based on how strong the price move is. They'll hang back and give plenty of breathing room if price is still moving strongly in the direction of the trend. But if price starts to fade or maybe backfill too much, it'll rush down and lock in the profit, kind of like a surface to air missile, adjusting its
3-minute congestion canceled.
And you just heard another alert in the background about how congestion is canceled. Oh, it's getting very close to the break-even stop. That's where you might have pulled the plug, but when you have an automated system, let it do it. Because watch what happens. As price continues, the dots move lower. And as the dots move lower, and I'm going to speed it up a little bit more, watch what happens. Every time a 1-minute bar finishes, and I have it on 15 times normal speed, so this is not what you would typically see, you will see the trailing stop indicator adjust itself. And we've got an offset.
9-minute break-in. 9-minute breakout confirmed.
We're hearing other alerts in the background, but it's not relevant to this trade. But what we're going to do is I'm going to show you what happens if price touches that indicator. It's about to do it. It just did it. I'm going to reassociate this. Why am I doing this? Because I had a 2-tick offset, and I'm going to say, okay, let's make sure that you still want to trail. We're not out of the trade. Notice the stop, the profit loss. Let me start over. The trailing profit stop is still in operation. It's still happening. It's still up here. I used an offset instead of putting it right at the price level, simply because I learned a long time ago that with this type of indicator, oftentimes it'll touch the indicator and you'll be out of the trade and you'll leave money on the table and you have the woulda, coulda, shouldas. What I do is I give it an offset so that you can stay in the trade even longer. And you can see how it's adjusting itself and it's about to get out.
1 minute, trend loss.
1 minute, trend loss. So we just lost the trend and the trade is over. So it took you out automatically. All the lines disappeared. I'm going to go up here and open up what is called the hidden panel for the chart trader. It'll show you the profit and loss. Now, if the GoToWebinar control panel is covering it up, you can move it out of the way. If you don't want to bother, I'll just tell you it says $820 worth of profit for that trade. You were risking $45 for each contract you were trading. You made $820 with a true mechanical system that's rules-based, Boolean logic, and virtually fully automated after you're into the trade itself. These are the things that eliminate guesswork, eliminate subjectivity, eliminate discretion, and above all, bring you consistency. You would have seen a scalp exit if it would have called for a scalp. You would have seen a scale 100 if it would have called for a scale 100. In other words, this system will adapt and adjust itself for whatever the market can give you. So my question for you now that you've seen a sample trade, is this something that you believe you could see yourself trading? That with this kind of automation and power, it's very easy to trade. So give me some feedback. Type yes if you like what you see. Yeah, it sure looks good, says Bruce. How about the rest of you? Let's get some additional feedback. I'm going to go ahead and close that hidden panel, make it go away. Yeah, we're getting additional feedback, a lot of yeses. So here's the thing, folks. I could spend a lot more time with lots more trades, but people don't want to sit there all day and go for hours and hours. I got to wrap this up. This is why I'm going to instead complete the presentation and invite you to visit with me, as I'll show you how to do it in just a little bit. Back into the presentation. Okay, Andrew wanted to know what alerts are available. Andrew, did you come in at the beginning or not? Yes or no? Okay. When you say alerts, are you saying about like getting into a trade? Is that what you mean? Okay. I'm going to speak to something, and I don't mean any disrespect. Way too many approaches to trading will suddenly give you an alert like, uh-oh, now you better buy or sell. I call that idiot light trading. Instead, I don't want to insult your intelligence. I am showing you what my students, you, would learn the rules from, and you would see the feedback ongoingly as each indicator completes its condition. So many ticks away from the moving average, or you do have a trend, or you do have overbought or oversold, or you know what the risk is, rather than just have it just be some kind of blind alert. I want you to be able to have the flexibility that a true professional system has. That's what separates this. This is a professional system instead of buy or sell, because then people want to blame the system instead of having an understanding. Did that help you, Andrew? Do you now understand why I take that approach? You bet. Thank you. Very welcome. Okay. Absolutely, we'll be following up with emails. So let's come back to what I was saying. Trend following is what this system is. It is the safest and most profitable approach. And we use, to get that, multiple time frames, different specific chart settings to give you that zoom lens effect so that you can gauge the strength of the trend, so you can predetermine before you're in a trade whether you need to scalp or scale out. This is what allows you to adapt to what the market can give you. And as you saw, we keep the risk under tight control. You will never lose more than $100 per contract traded. Typically a lot less. As I showed you on that sample trade, it was only $45. And you saw all the automation that takes place once you are in a trade. You got a bracket, an OCO order. I didn't even explain that part, which means that when you hit one or the other is straight canceled, and that way you don't need to worry about canceling an order if you forgot to do it. All of this means if you follow the flow chart, you have a Boolean logic rules-based mechanical trading system. Simply put, 4 steps to get into a trade. You got trend agreement, the 1 and the 3 need to agree, best as if all 3 agree. Step 2, a pullback to a moving average, and it gives you the readout ongoingly, tick by tick, moment by moment, as you're getting closer, so you can get ready instead of springing it on you and saying buy or sell. You've got independent uncorrelated confirmation. You either need overbought or oversold. That's the oscillator, and it doesn't put you in the trade. You park an order and let the market put you in a trade. But last of all, you determine the risk. You have an indicator that shows you what the risk level is as the bar is finishing. And if it's too much, you don't park the order. You don't take the trade. If it's acceptable risk, then you fulfilled all 4 steps and you enter the trade, and you can depend on consistent returns. That means you will get consistent results, making money. Now, I want you to have a roadmap to doing this. I'm not just going to say, hey, show up in my trading room. And by the way, I call it a coaching room because I don't just say, hey, this is where I woulda, coulda, shoulda entered and hide the losers. I am going to deliberately take losing trades right there in front of you, because I want to show you why they worked or did not work. And I'm going to allow you to talk to me instead of typing your questions. You will have a full roadmap that'll enable you to, at a self-paced rate, do the online course, be in my coaching room, and you can ask questions anytime you want while you're in my coaching room. You don't need to wait for permission. You can, in the middle of a trade, still say, Michael, can I do this, or did I do it wrong, or whatever? And you know what? I do something that nobody else does. If you're not sure if you're doing it right, I can even share your desktop and watch you take a trade, look at your charts, and help coach you through any problems you're having. Nobody else does that. I've already told you about how you get benchmarked. And as you can see, our course is laid out just like going to college, freshman through senior. And no, it doesn't take 90 days. It's self-paced. I'm just saying you get a full 90 days to finish it. Most people take a whole lot less. And when you are finished, you graduate and you will become a real professional trader. So It is structured. It is self-paced. It takes a lot less than 90 days typically, unless, of course, maybe you've got interruptions. If you have interruptions and you run out of time, don't worry. I can let you go beyond 90 days. You can choose to go full coaching, month to month, for only 47 bucks a month. I'm not trying to make a bunch of money off of your extended support. So that's only for my personal coaching. The system, the tools, the software, the spreadsheet, the journal, all of those other things, they're yours for life. You do not need to pay another penny for anything else. The only thing that has a limit on it is my personal coaching. And as I say, if you run out of time, you can still choose to go month to month. And a whole lot of students that successfully graduate do choose to come back because they love being in the coaching room and they say, I would like to get a tune-up. So you can do that. Let's go ahead though and wrap things up and build some value. I mentioned earlier that there are really only about 6 or 7 true mechanical day trading systems on the planet. I mean that because there's a whole lot of vendors out there that say, hey, my stuff is a system. They're just hyping their product. This is a true mechanical system. It is built into the software. It is automated 95%. And you do not need to worry about discretion or subjectivity. It is totally cut and dried. So the other so-called systems that are out there, they start at the low end of $3,000 and go well past $10,000. Don't worry, I'm not going to ask you to pay anything close to that. But even if I were to price it at $3,000 on the low end, let's add some extra value and show you some of the other things that are included in the package. Most importantly, you get me as your personal coach. I consult with corporate clients and I bill at 500 bucks an hour, and I get it. You get me for the full 90 days as much as you need, not just in the coaching room. You get me offline. If you need to talk to me on the phone or meet with me privately in the coaching room, yes, you can. I don't think anybody else does that either. So you're getting way more than anything else that's out there. And to get you off to a really solid start, I had a weekend webinar with real life students that I recorded a while back. And I broke it into bite-sized chunks so that you can watch the training videos yourself at your own pace. They're in our password-protected members area, which, as I said before, it's yours for life. You can come back to it anytime you want to. And to get you off to a real quick start with our system, you don't have to build those charts yourselves. You don't have to install those indicators. It's a simple 5-minute installation process that puts our TradeSafe system into the NinjaTrader software. And by the way, if you get stuck or if you say, oh, I don't think I can do that, don't worry. I have a full-time support desk. I'm not a one-man band. I have a real corporation with a big team to help you. And my support staff can actually remote access into your computer and help you get the job done. You already saw the trend indicator, which both gives you visual and audible alerts, and that's on each and every chart. It updates all by itself, even if it's hidden. And you saw the 4 individual steps to getting into a trade-safe trade that eliminates discretion and subjectivity with the feedback from each of the indicators, the pullback, the overbought and oversold, and the risk, and so forth and so on. And of course, once you're in the trade, you saw the automation take over with one of those 3 exit strategies. ATM stands for Automated Trade Management. And you get that as part of the package. And of course, when you are benchmarked, I already mentioned this earlier, that the typical student will generate over the course of their practice trades $3,000 to $5,000 for their statistically viable sample of 30 trades. And while you're in my room, I record everything. So if you miss a session or you want to review a session or you want to see what I've been doing before you join TradeSafe. I've got hundreds of hours of archived sessions that you can review at your convenience. I also have tips, tricks, and techniques videos that you can watch. And of course, because I want you to run this like a real authentic business, I have a business plan, not just for your goals, but also to put guardrails on your trading so that you don't just jump from trade to trade to trade and dig a deeper hole. You're required to say, okay, if I have X number of losers, what do I do? Am I going to keep trading or am I going to stop trading? What am I going to do? Same thing about how much am I willing to lose in a day or a week or a percentage drawdown. You have to fill in the blanks in the business plan and submit it to me for review, because I actually do look at each and every business plan and give you feedback. You will, in order to keep your business running, use the spreadsheet I provided so you could get benchmarked and keep benchmarking yourself ongoingly and continue journaling each and every trade. All of this is provided to you as part of the package. And last but not least, I want you to forge diamond hard discipline, because if you don't follow the rules, none of this will work for you. I have a very powerful technique that I learned many years ago when I was a psychotherapist that will help you stop that self-sabotaging behavior, over trading, revenge trading, analysis paralysis, whatever it is. You won't do it anymore. This will stop that cold. When you add all this up, you got a lot of value there, over $11,000 worth of real value. Am I going to ask you to pay that? Of course not. Normally, I wouldn't even ask that. Normally, the entire package is $39.95, and I've had people pay that and tell me it was cheap at twice the price and they've earned it back in a month. Instead, for a limited time offer, I'm going to slash it in half and let you have it for $19.97 until next Wednesday, midnight Pacific time. That's right. You don't have to buy it today. I don't want to pressure you. If you want to do your due diligence, in fact, I really want you to do your due diligence. You want to know if you're really qualified to get started. You want to be able to talk to me, get your questions answered, find out how you can spread your payments out, because I know that's still a chunk of change for some of you, even if you can earn it back very quickly. But I offer you very flexible payment plans, and I'll explain a little more about that in a couple of minutes. So take a full week to consider this until Wednesday Pacific time, midnight of next week. So if you want to jump to the head of the line and not wait for the email that has that link for watching the replay and another link to scheduling time with me, here's the link. You can jot it down, daytradesafe.com/apply now. Write that down and go ahead, and after we're done, go to your browser and find the best date and time that works for you and schedule time, because what happens during our consultation, and you want to do it quickly because you want to lock in that discount. You will be calling me. I don't call you. You will get reminder emails and reminder texts. That's why I want you to use the cell phone number that you provide. And you're going to get a very valuable conversation. This is going to help you diagnose what's not been working for your trading, and you'll get all your questions answered without any sales pressure whatsoever. I do not pressure people. I know I've been talking fast today. That's because I got a lot of material, but I definitely am not one of those, hype type salespeople. I want you to just know at the end of our conversation if this is really a good fit for you, because my goal is for you to have complete confidence in TradeSafe. And in order to help you afford it, we have flexible payment plans. The one that I truly recommend when you do go to the Join TradeSafe page, there'll be several buttons. One of them is, hey, click on this button to use your credit card. Another button is gold, and it's the PayPal button. Now, no matter what you think about PayPal, I encourage you to give it a try. Here's why. Because this will take you to a very special place inside of PayPal that lets you spread your payments out. They will give you up to 6 months to pay them back, not me. They'll pay me up front. But you can pay them back, and if you pay them back in 6 months or less, you know what? They won't even charge you a penny of interest. That beats the heck out of a credit card, doesn't it? So I would try the PayPal option first. If for any reason it's not a good fit for you, and by the way, this is only for US citizens, I'm sorry, that's their policy, not mine. If that didn't work for you and you still can't put it on your credit card, I do have other payment plans that are available. Unfortunately, I will have to charge some interest because I am assuming the risk. So please do book that call, talk to me so that you can get all your questions answered. Here's that link again. Write it down if you missed it before. daytradesafe.com/apply now. And by the way, if for any reason all the slots fill up and it spills over past the deadline, I will do the honorable thing and I will honor the discount, even if it's after next Wednesday. Okay? So pick out the best date and time that works for you. Don't waste any time because it does fill up fast. Know that I won't pressure you in any way. Oh, and before you do talk to me, please do watch the replay because I need you to be fully familiar with what you saw. I can't recreate this webinar over the phone, okay? Now, there may be one or two of you who have either seen this before or you already are sold and you know this is what you've been waiting for. If you don't want to talk to me and you want to just go straight away and get the Trade Safe package in its entirety, here's the link, daytradesafe.com/I want in. That's all one word, I want in. So that will let you go straight to it and you can get started immediately. The moment you have been accepted, you will be starting to have access to the members area. It's password protected. You'll start downloading parts of the materials and you will be on your way to trading success. So I have time for one final question. Does anybody have any final questions? Make it short because I know I've run way over and I do apologize. Oh, well, thank you very much, Bruce. I appreciate it. And I sure hope you do schedule time. I want to make sure that you get all your questions answered. And I want to thank everybody else for taking time out to join me today. There's that link again for scheduling time, daytradesafe.com/apply now. At this point, I'm going to go ahead and close the room. And I want to say thank you and trade safely. Bye-bye.